please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Sonia. Yes, it does look like the bulls are taking a breather before the budget. They had tanked up adequately in December and early Jan. So a bit of lightening of positions by traders is, I guess, par for the cause. But globally, there is an even more of catching of the breath, as it were. It still doesn't look like it's endangered the global growth story or the global rally in any significant fashion. It's just minor warnings that will always come, minor breaks when you're speeding up. And that comes in the form of higher interest rates or higher global yields. But a bunch of fixed income and other experts I spoke to believe that because we have not seen it in such a long time, it suddenly looks like it's a huge rise in yields, but that doesn't disturb the growth picture or the rally as of now. So at the moment, it looks like good to catch your breath.
Well, I guess after that huge run-up that we've seen, morning Lata, morning Anuj, but the big talking point, right, Amazon and Berkshire getting into healthcare, I mean, how's that?
Disruption.
Yeah, that's big disruption. So we saw all healthcare stocks come under pressure yesterday, like United Health, etc. But getting back to our own markets, of course, we saw that biggest sell-off on the Dow, but we also saw selling pressure from FIIs and DIIs in our own market. So FIIs sold about 100 crores, DIIs 300 crores. But the question we're asking this morning is, in hindsight, global sell-offs have always been a great time for Indian investors to buy. Anuj, morning. Is that the way to look at this?
Morning, Sonia. Morning, Lata. You've spoken about disruptions from Amazon. What about Amazon Go? You can go to Amazon store, pick up whatever you want, and just go out, and you will be billed on your credit card because of sensors and everything. So really interesting, and perhaps that explains why Amazon as a stock globally has done what it's done. But look, I look at positives every morning. I think for me, the big positive this morning is that crude is down to 68. And that's something that you could look at. The market is going through a correction, but is it tradable? That is always going to be the key, because we know it's a bull market. At some point, the correction will end. How do you trade it? Because I won't be surprised if there's green at some point in the last hour of trade. I could be wrong, but I base my basic premise on two facts. One, tomorrow's budget, and two, anecdotally, you go into the Fed events with long positions. The market does hard bargain before the Fed event, but after that, the Fed normally has something for the market to cheer. I don't know. The problem for the market is in the mid caps, and that's the warning sign that the market had given last week itself when the market was rising, but the mid caps were correcting. In fact, the last 1 month has been distinctly bad for portfolios. Nearly 200 of the BSE 500 stocks are down 10 to 35% from their highs. So you can imagine, what would be the position of the portfolios. On top of that, if you hedge that portfolio against the Nifty, that went up 5%. So you made losses there as well. Now, yesterday, FIs took aggressive short positions in index futures. For me, the key would be, is yesterday's low holding, or is it, being breached with significant margin? My sense is a lot of selling has happened now for this market, and we may have presaged a lot of global selling as well, though the SGX Nifty is still down about 45 points. Advanced decline would be the key monitorable. I think today is a day where you divide it in two halves. In the first half, you look for shorting opportunities in the highly leveraged, in the mid caps, in the F&O stocks. You will see some follow through, but post 130, it won't hurt you to try taking some contra longs in this market. Maybe via call options if you want to, or if you're an aggressive trader, maybe even with futures, because you would be very close to important support marks for the market. 10,850 thereabout would be the rising 200-day moving average. So if you slip below 11,000, in that case, you're very close to a support. So in the first half, maybe you want to see selling in the mid caps, but advanced decline, my sense is by 12 would be bombed out, and then second half there could be a bit of a rally in the market today.
Well, actually, much may depend also on L&T and ICICI. Today is also a day of very big numbers. Now, chances are, for instance, JSW numbers will be mind-blowing, even if you went by the other steel numbers that we have got. But to some extent, the tide could be shaped by results as well, because they are really marquee companies.
Yes.
Well, my question was that you spoke about a contra long today. In 10 out of the 14 previous budgets, the market has always ended in the green post the budget. Not maybe on the budget day, but the following days. So if tomorrow we get, say, the only thing the market is interested in is whether there's LTCG or not.
Yes.
If the duration of LTCG, that's the only thing that changes, will that be taken as a relief by the market, and could we see a relief rally?
The feedback we're getting is that there could be LTCG which could come, and not just the period which is being increased from 1 to 3 years, Sonia. There would be calculations on how that LTCG would be imposed. But look, the budget is going to be a one-day affair. After that, we'll move on to global situation, because like it or not, this has been a global rally, and this correction is also global in nature. So because you've seen Dow fall for 2 days, you've seen our market also fall. So I think the market on LTCG will react for a day or two at best, and that too also I'm being charitable, maybe 2 or 3 hours. After that, the market will move on, and then it will depend on global setup.
So the contra long is based on
contra long is based on the fact that you have seen 2 days of back-to-back sell-off in US, and Fed event normally is favorable for the market. Today you'll have the outcome of the Fed event, so that normally could be favorable. So post 130, if the market is already down a lot, that won't be the time to sell then. That would be the time to look at buying. Also because crude is also coming down, so that also is a bit of a macro positive for you.
Actually, two things. Crude is coming down because all risk assets are coming down. So if the risk rally resumes, then crude will again go up. It's only gone down because all risk assets have gone down. And, on LTCG, it's, I think, almost ubiquitously accepted that if 1 year becomes 2 years, then the market will, will not even jitter a bit. Yeah, it's going to be par for the cause. But if there is a redefinition and long term, as we now know it, that is plus 1 year plus holding period, is taxed, then I think the markets will take a day to come to terms with it. Then it will not be a 1 hour event.
Yeah,
then the market will definitely have to take
the market chatter is 10% LTCG being introduced. Of course, that's just market chatter, but we'll find out, of course. We should not be preempting these things. Let's find out.
That is the only possible binary event, binary clause in the budget. The rest of it, I mean, I think we have to grow up and accept that budgets are going to be accounting statements.
Yes.
I mean, you can't change a nation of 1.3 billion people with tinkering taxes anymore.
And this could be one of the shortest budget speeches of recent memory, Lata.
I don't know, it could be because they don't have indirect taxes. So it was, we were all betting that, budget as we know it will not be that big an event, but you can never tell. It's also the last full budget before an election, and then there are lots of questions thrown on farm distress. So the government, through the finance minister, may well take time to even elucidate some of its views and what it plans to do or what it has already done. So, I mean, we can't take bets. We have to be prepared for a budget speech from 11 to 12, a budget speech from 11 to 12:30, an LTCG which is redefined altogether. We have to be prepared for it. That's, for me, that is the only binary issue.
Yes.
Otherwise, I think the budget will be passed as one of those events.
Yeah, since indirect taxes are subsumed into GST, gone are the days when we, threadbare, listen to every word on each sector. But anyway, exciting times ahead. Let's see what our wise experts have to say as we head into trade this morning. Anish Damania of IDFC Securities says, given the underlying strength across most sectors, he reiterates their March 2018 Nifty target of 11,300. He says IDFC's top picks within the Nifty 50 are SBI, ONGC, HPCL, Hindalco and Aurobindo Pharma. Bajaj Auto is the top sell within the Nifty 50.
Okay, and now money market views. Lately, that's becoming important. Pramit Brahmabhatt of Veracity says, on the back of negative cues from domestic equity market, the rupee will remain under pressure. He expects the USD INR pair to trade in a range of 63.50, 64. Some pressure. Well, bonds, I guess, will be a little more important. Dhaval Dalal of Edelweiss says that Indian government bond yields have trended higher in line with the recent global trend. He says market positions are getting lighter ahead of the union budget for FY19, adds the 10-year benchmark bond yield closing above 7.41 on month end may pave the way for further upward move in government bond yields from a technical perspective. Well, actually, that's a market with no buyers. It's just a buyer strike market, so yields are going to rise.
Okay, that's interesting. Could be interesting to see how the financials react. But over to Mangalam then for the world view.
Well, yesterday, the Dow fell about 362 points, and that was the biggest decline that it's posted since May itself. The stocks that took a pummeling for the healthcare stocks as well as a lot of those rate sensitives. The healthcare stocks primarily because the three big boys, Amazon, Berkshire Hathaway and JPMorgan, are coming together for perhaps disrupting the healthcare space itself. S&P 500 again, the worst day since August. Nasdaq too fell about 1%. The street is a little worried about interest rate hikes that could perhaps douse the bull market. Those interest rate hikes, though, may not come today. Only 5% people believe that the Fed would move on the interest rates today. 78% believe that the next hike is coming in March. The CBOE Wix, the fear index, that one is up about 30% over the last two sessions. Across the Atlantic in the European markets too, we saw a fair bit of red. The only one that really stands out is the Ukrainian index, which is up and away for the last many trading sessions, continuing its outperformance. No real moves seen in the emerging market space, but remember, we saw some strengthening on the yen as well as the euro, so not good news for Japanese exporters. That index lower. Majority of the Asian markets lower, barring the Korean index. The SGX Nifty indicates a start with a 30 to 35 point in the red.
All right. Well, thank you very much for that summary. Global, we have lots to watch globally. And so let's have some experts advise us. Jeffrey Dennis, Head Global Emerging Market Strategy and at UBS, and James Glassman, Senior Economist at JPMorgan, have joined us on the phone line. Good evening, gentlemen, and thank you very much for staying up for us. Jeff, first to you. Should we worry about this, the pause that the bulls have taken in the US markets and in, other equity markets as well? As well, should we worry about the rise in yields?
Well, I think you put the pullback in the markets down to two things. I think first the rise in yields for sure, and I think you don't worry about the rise in yields sitting around 2.7%. But if we were to see a further sharp increase in the short term, we would be concerned about that. I think the other thing that has clearly brought the markets down is been the new tariffs imposed by the U.S. government in a couple of sectors, solar panels and washing machines. That's raised the fears of heightened trade tensions around the world. So I think those two together over the last couple of days have really led to probably a long overdue pullback in markets. Today's action was pretty savage, there's no doubt about that. But the markets were overbought, and I think that they needed to have some sort of a pullback. And the big risk from here is a strong rise in yields, certainly, and also heightening trade tensions around the world. And we have to watch both of those things.
Hey, Jeff, morning. So if this is a long overdue sell-off or a pullback, as you called it, what should investors across the globe do? Because generally, a sell-off across global markets is a great buying opportunity, especially for investors in India. Would this time be the same?
We tend to think so, yes. I mean, we have the view the dollar's still going lower. We have a reasonably buoyant view of the global economy in 2018. We don't expect bond yields to go materially higher than they are now. And so one would think against that sort of a background that this sell-off will not go that much further. I'm not going to try to call it on a daily basis, but we would think this is a buying opportunity, including, of course, in my world, which is emerging markets, which have had a fantastic start to the year and had a big sell-off today. But they're still up 8% on the year, and I think this does represent a medium-term buying opportunity.
Okay. Jeffrey, good morning. Since we're discussing emerging market in India, I wanted your thoughts on how foreign investors would approach the budget tomorrow, and if there's introduction of long-term capital gains tax. Do you think there would be significant disappointment if that happens?
I think there'll be certainly significant disappointment if there is an introduction of a long-term capital gains tax. I think what we're focusing on is to see what sort of fiscal tack the government's going to take for the new year, the new fiscal year. The last full fiscal year, of course, before the elections in 2019. We are expecting the government to announce a slightly tighter budget. 3.2% of GDP is our budget deficit forecast for fiscal 19. But I think there'll be some focus on whether that's the number and also how we get there. Is there going to be a lot of money raised from the government selling shares in public companies, for example? So I think it'll be the details as well. And the bottom line here is the market doesn't really want to see significant fiscal easing into the election for sort of electoral purposes. And we suspect you're not going to see that. We think there will be a lower budget deficit target.
Okay, so fiscal deficit is what you all will watch. James Glassman, thank you very much for your patience. Would you worry about the rise in yields and the fall in the dollar, which actually looks a little contradictory in terms of moves? Do these have the makings of some financial instability at all?
I don't think so. I mean, I think we've all been wondering when are interest rates going to be moving back to something more normal. These are unnaturally low interest rates, and it's all happening because of the asset buying by central banks. So I think this is a healthy response to an improving global economy. And, you know, when you think about what is the new news over the last several months, the new news that might be affecting the dollar is that the European region, finally, the lights are coming back on. And I think this is really more a story about economic trends building momentum in Europe and elsewhere, and not so much worries about trade protectionism. I mean, there's a lot of noise about trade, but honestly, I don't think markets fear that we are heading into an era of trade protectionism. This is really more about economic health.
I take your point about trade, but you know, the only fear is, will there be more rate hikes than what the equity market is penciling in? To that extent, what will you expect from the FOMC as well?
Yeah, no, I think it's going to be all guided. It's going to be dictated by the performance of inflation, and inflation is very well behaved. The Federal Reserve is forecasting 3 hikes this year. I don't think they themselves are not the risk. If the economy turns out to be much stronger than they anticipated and inflation starts to move up, maybe there would be more hikes. But honestly, I think they will respond appropriately, I think, in proportion to what's going on. And I don't think that's the kind of thing that makes me worry about the global backdrop. It's really more, if we should see an unexpected surge in inflation, that would be a problem for everybody.
Okay.
Sure.
But I think what we're seeing is a response to, finally, an improving global economy. And I think this is all healthy news, frankly. Bond yields are really a barometer of economic health.
Okay.
And so it's what you hope to see.
Okay,
James,
I wish we could say that about our bond yields as well. Thank you very much, James and Jeffrey, for joining us. I think the uniform message is that we don't have to worry about rising yields just yet.
Yeah.
They are a barometer of a performing economy.
Well, we wake up to weak global cues. Not only has the Dow fallen more than 300 points, but most of the Asian markets are also under pressure. The Hong Kong market that we are most correlated to is now down more than 200 odd points. But our research team is here to give you the list of stocks to watch as we head into trade this morning. So many to speak about. Anuj, what's on your list today?
2 mid-caps. Sonia, first is Balkrishna Industries. My sense is commodity using stocks may start to outperform. That's the theme which played out yesterday. And Balkrishna ended at highest point. Crude prices down to $68. Of course, rubber prices as well coming down. So that has a dual impact on tire companies. And Balkrishna is the strongest of the lot. On the way down, the stock which could be interesting is Just Dial, because it just sliced through its 20 and 50-day moving average. And there's a good chance of a 200 DMA test at 450. So that would be an interesting stock to track. Make no mistake, in the first half, you will see a lot of pain in the mid caps, deleveraging that will happen. But in the second half, there could be some recovery. So just want to repeat that point.
Okay. Well, I would definitely watch out for how investors greet Godrej Consumer. I thought the numbers were mind-boggling. Mangalam, your take?
They're good numbers, Lata. No two ways about it. Tell you what, 18% volume growth when we expect 12 to 13% is a fairly positive number. I'm going to be blunt here, use the name of their product itself. Total income growth of 10%, we were expecting 10.5. EBITDA of 589, we were expecting 588. No real surprises there. But the net profit, that one came in at 430. We were working with 413. That's because the other income was higher. The internals, they were very strong. 18% growth on the volumes. And in India, we saw a 24% growth in their soaps business, 33% growth in the hair colors business. Hair colors is a faster growing segment, so that is a positive. And internationally, the Indonesian business saw a sequential recovery. So there were concerns over the last 2-3 quarters. Seems like right now they have been arrested. The street should like it.
Okay, thank you. Actually, I'm most impressed by 24% growth in soaps. You thought India has more or less bought soaps. 24% growth is definitely taking market share.
Okay, he said be blunt, right? What about hit? It's a big hit. That's a goodish product as well, right? Okay, we're trying to learn some puns from Mangalam Malu there. But let's move on and find out how Oberoi Realty's numbers looked. Sonal, how did they fare this time?
Very strong set of numbers, Sonia. The revenue went up by 41% and actually on all parameters it beat our estimates. In terms of EBITDA also it was up around 53% and the margins came in higher by 400 basis points. All this leading to a profit increase of around 41%. The main growth was led by the real estate operations where the revenue saw a growth of around 48%. In terms of occupancy, they saw the highest occupancy ever in its investment properties. In fact, Oberoi Mall, that saw an occupancy of around 99%. The number of units booked in the quarter were around 68 and the sales booked was around 406 crores. I expect the stock to be in green today.
Okay, expect the stock to be in the green, one of the finest real estate companies. Absolutely almost no debt for Oberoi Realty. Rare to see in this space. But Lata, what about OBC?
Oh, I worry about these banks. I mean, every quarter you hope that the worst is over, but it looks like this year, this quarter and even the next is going to be pain for corporate facing and public sector banks. So, I mean, where do I begin? Net loss, fifth continuous quarter of reporting losses, and now the total net loss over 5 quarters is, over 5,500 crores. Gross NPA has increased even from elevated levels, and the net interest income, you would be happy if at least the income was growing fast. That is growing even slower, so it's down from year ago levels, 5.9% growth to 1,000 crores. So it's not looking extremely a pleasant sight, and this is also indicative of other PSU banks, so you would worry.
Okay, you would worry about OBC, but what about a small financial bank like AU Small Financial Bank and also Cholamandalam, Abhishek?
AU Small Finance Bank, the asset quality has actually improved by 25 basis points on a quarter-on-quarter basis. So gross NPA is now at 2.83% versus 3.08% on a sequential basis. NII increased by 25% while net profit at 79 crore was in line with analyst estimate at 79 crores. Coming on to Cholamandalam, strong disbursement. Now disbursement grew 23% on a sequential basis. Now that was driven by vehicle disbursement at 30.5%. We saw CV sales being very strong for manufacturers in this quarter, and that has also kicked in for Cholamandalam. You see the asset quality has also improved. The overall gross NPA is at 3.7 versus 4.46, largely led by vehicle gross NPA, which reduced by 1 percentage point to 2.78% on quarter-on-quarter. Another set of numbers coming in from Bharat Financial. Now the return ratios are back to the best, with ROA at 4% and ROE at 20%. They also clocked their highest ever quarterly disbursement, and that saw asset quality also improved by 60 basis points to 4.6% versus 5.2% quarter-on-quarter. Back to you.
Okay, that's firing on all cylinders, isn't it? Positive.
Yes, very positive. But let's talk about BEL. This is a stock that used to be a favorite of investors, but let's find out how the numbers looked. Unimpressive lot this time, Sona?
Yes, Sonia, I would say it was a weak set of numbers. Though the revenue and EBITDA came in higher than our poll, but on a YOY basis, it showed some sort of decline. So the revenue was up 23%, but EBITDA came in down by around 8%, and the margins came in at 17.6% versus 23.7% last year. Even the profits were down 19% at 302 crores, and our poll threw up a number of around 332 crores. Why were the margins down? It was because the employee costs were higher by 33% due to pay revision and gratuity ceiling enhancement. Even the profits came down lower because they were getting some additional benefits earlier because of investment in R&D, and that has been withdrawn. So now profits came in lower because of that. I expect the stock to be in red today.
All right. Thanks a lot for that, Sonal. Let's get to Mangalam back. Was Blue Dart as good, Mangalam?
Lata, Blue Dart was good operationally, but don't see a big up move on the stock today because the revenue, that was down 2%. EBITDA was up 40%, net profit up 61%. Optically, looks like a great set, but we were working with a low base. The stock moved from about 3,900 to about 4,600 over the last few months, and people are paying top dollar for Blue Dart 50 times as compared to the others, which trade anywhere between 30, 35, and some even at 15 times. So Good set of numbers, no doubt about it, but it comes at a price. Let's see whether that premium is sustained or not. And going forward, crude prices are rising too. So can they go ahead and sustain these margins?
Oh, yes. Yeah, I mean, there are no excuses. If you're getting 50 times, you just have to perform. No excuses for a fall in revenues.
Okay, so far we've had a strong set of numbers come in from Godrej Consumers, Oberoi Realty, Blue Dart. Let's see how that goes. Bharat Financial. And weak set of numbers from Lakshmi Vilas Bank reported quite a weak set of numbers. And net loss.
I am worried about banks. I mean, OBC, like you pointed out. I mean, there is pain and people are recognizing it slowly. It's not over.
Oh, it's not over at all. In fact, let's find out more from the numbers that came in post-market hours. Ronit is here to give us more. Ronit?
So strong set of numbers coming from Ashoka Buildcon, the EPC player. Revenue was up more than 25%, as well as the margins, they came out 40 basis points higher, and the PAT, that was up by 21%. Moving on to Pratap Snacks, operating leverage kicking in, and a strong set coming post their IPO. Revenue was up 6%, but the EBITDA, that more than almost double to 20 crores, and the PAT, that was up close to 5 times at 11.4 crores. Moving on to Pesa Low, a weak set of numbers coming in. Net income was down 6%. The finance cost was down around 13%, as well as the net profit that was down 19% quarter on quarter. And finally, Gravita, a good set of numbers coming in from the waste maker. Revenues are up 44%, as well as the operating margins, they were down 10 basis points, but the PAT that was up by 27%. So you can expect the stock to be in the green today.
Okay, that's a bunch you've given us. So we'll try and watch out for those. Naveen, you have some more.
Yeah, so I'll begin with Orient Bell, clearly beneficiaries of the GST. Remember, the management had also told us, and this will be seen in the revenue, which has grown by close to 17% at around 170 crore. Operating margins have also been maintained around that 7.2% mark. Meanwhile, PAT is up close to 60%, so good news for Orient Bell. On the other hand, not so good news for Reliance Naval. The weak performance continues in terms of the revenue, which is down by close to 56%. EBITDA is down, and the loss widens at around 166 crore versus 132 crore on a year-on-year basis. Expect the stock to be in red. Back to you.
Okay, expect that stock to be in red. But you know what? Globally, the big news flow is the fact that Amazon and Berkshire Hathaway, along with JPMorgan, have decided to tie up and get into healthcare, reducing healthcare costs, etc. That's going to disrupt the market for sure, the global market. But what about Indian stocks? Ekta joins in to tell us more. Ekta?
Well, I expect the likes of Dr. Reddy's, Aurobindo, the likes of Natco, Lupin, all of these stocks to probably be in the red today. And that's simply because of the news that you mentioned, that Amazon, Berkshire Hathaway and JPMorgan are going to create an independent health company. And first, the initial focus is going to be on employees. So this really disrupted stocks overnight in the US. Insurance stocks were down. The Dow Jones US Pharma Index also lost around 1.7%. We don't know the details, but what you can expect is that eventually the focus will also be to reduce drug prices. And obviously that means that lower earnings for pharma companies such as Indian pharma companies. Plus, in the State of Union address, Trump has re-emphasized lowering drug prices. So that again is is basically a direction in terms of where exactly the industry is heading. Separately, there's news of Momenta receiving or probably launching the multiple sclerosis drug Copaxone generic into the US market. So that means further competition for the likes of Dr. Reddy's and Natco. I expect them to probably be under incremental pressure on account of this. And for Sun Pharma, I expect them to probably buck the trend, because now they're making themselves into a complex specialty play and moving away from this entire purely generic kind of market.
So Reddy's, Aurobindo, Lupin could be affected.
Okay, well, let's do a quick recap then of our top stocks to watch. Expected to gain are names like Balkrishna Industries, Godrej Consumers, Oberoi Realty, AU Small Finance, Cholamandalam Investment, Bharat Financial, Blue Dart, Pratap Snacks, JK Paper, Apollo Pipes, Gravita India, Ashoka Buildcon and Orient Bell. While stocks expected to be under pressure today, of course, the companies like OBC that reported weak numbers, BEL was disappointing, Just Dial, Pesalo, Reliance Naval, as well as pharma stocks like Dr. Reddy's, Aurobindo Pharma and Lupin.
Blue Dart, I'm not sure. I think Blue Dart could be in the red list rather than the green list.
Okay, let's take a quick break on that note, but it's the last trading day before the big union budget. How do you approach it? Our technical experts Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will join in next.
Galaxy Surfactants Limited, a global supplier of surfactants and specialty ingredients to leading personal care and home care FMCG brands. With a product portfolio of over 200 product grades, marketed to over 1,700 customers in over 70 countries. Now makes a public issue of up to 6.3 million equity shares of face value of 10 rupees each. The 100% book built offer being offered in a price band of 1,470 to 1,480 rupees opens 29th January, closes 31st January 2018. For details and risk factors, refer to red herring prospectus.
दुनिया को बेहतर बनाने के लिए जरूरी है एक सोच कि दुनिया बेहतरी के रंगों से निखर सकती है और इन्हीं रंगों को हम आपसे शेयर करते हैं हैप्पी रेनबो बॉक्स में।
Take your family on an Abu Dhabi adventure. Have fun, explore, and enjoy everything that Abu Dhabi has to offer. Stop over in Abu Dhabi or get away for the weekend. Book now at etihad.com.
I'm Shireen Bhan. For 17 years, I've helped to make sense of the budget in real time. So join me on the 1st of February on CNBC TV 18, India's budget headquarters.
IRB presents Election Budget Mission 2019 on CNBC TV 18, your budget headquarters.
Presented by IRB Infrastructure Developers Limited, Highway to Growth. In association with Escorts, engineering the fundamental